Stanlib Africa represents the investment businesses of Liberty Holdings in Africa and has been operational since 1997. The Stanlib Africa Equity Fund aims to achieve medium to long-term capital growth across Africa and is worth 355 million rand. Half of the portfolio is made up of holdings in Nigeria and Egypt. And here to tell us more is the portfolio manager himself, Thabo Ncalo. Thank you so much for joining us.
Cool.
Why
thanks, guys, and
Nigeria? And well, Nigeria we know,
yes,
because that's the hot story on the African continent. There are many others coming up, but Egypt also makes up a very significant proportion of your fund.
Egypt is a significant market. You know, if you look across the African continent, Egypt makes up a huge chunk of the MSCI benchmark as a start. But also from a GDP perspective, from an economy perspective, I mean, Egypt is now the third largest economy after Nigeria. So you've got South Africa, you've got Nigeria, and you've got Egypt. So naturally, from a stock market perspective as well, you know, that's also reflected in what we're seeing in stock market capitalization, where naturally the biggest stock market in Africa will be South Africa, you know, and Egypt, Morocco, Nigeria are some of the larger ones as well. So
I've got to throw into the mix Ethiopia because I've just come back from the World Economic Forum, and that is the fourth largest economy on the African continent.
Ethiopia is very important, but unfortunately there are two markets that we all sort of are celebrating to get into. One is Ethiopia, the second one is Angola. So both markets, as you know, I mean, they have very big economies that have been growing quite rapidly. But these economies and so these countries don't have stock markets at the moment. But I think it'll come, you know, and I think over time we're going to see a bit of a gap between sort of GDP and stock market capitalization. And it's something, for instance, we focus on quite a lot in terms of the ratio between, you know, the size of the GDP and the size of the stock market. So Ethiopia is certainly one that's bubbling under. We're keeping a close eye on it. Still a bit of a closed economy. But yeah, it's one way.
It is a closed economy, but they are looking at a number of privatization of state assets, etc., etc. Kevin, you want to jump in?
It is an exciting area to be in. Just in terms of the investment philosophy, are you value, are you growth, are you top down, bottom up?
Yeah, from a philosophy perspective, we are style agnostic. Because unfortunately on the African continent, the markets aren't deep enough for you to focus on, say, value style or growth style or what have you. You know, most markets are either, you know, you could look at a stock market and actually find a mix of both styles. You know, you could find a lot of sort of high growth, high PE sort of stocks that would be sort of more inclined towards sort of growth side. And you have, for instance, in a market like Nigeria, the banks are on sort of less than one times their price to book, you know. So you could argue that's a value market as well. So the market is unfortunately not big enough or not deep enough for us to focus on the same style. So I mean, our primary focus is we are style agnostic. We bottom up. So we try to focus on picking the right companies with the right management, with the right cash flows, and then that's how we build our portfolio. And
your sector bias at the moment is heavily skewed to financial, around about 40% of the portfolio, followed by consumer, which makes up about 22%. Those obviously are two of the more exciting stories on the African continent as you see it.
We love the financial sector. We love the banks because you know, you look at a market like Nigeria, the banks make up a huge chunk of the stock market. The same goes in Kenya. Mauritius is dominated by banks. The only market, I guess, where the banks are still a bit weak is Zimbabwe at the moment because obviously of liquidity issues and some of the problems there in the banking sector. But all across, I mean, you find a bigger representation of banks in Africa. And I think banks are quite important. You know, as you can imagine, banks give you tentacles into the rest of the economy. You know, banks, if you look at, for instance, the sector loan book, of most of these banks, you know, they give you access to telecoms, they give you access to all kinds of sectors, perhaps, that you wouldn't exactly find investments in. So, you know, we love the banks, and unfortunately, there tends to be quite a lot of it because there are unfortunately a lot more banking stocks than there are other stocks, I guess, yeah.
The banks are an exciting story. What are your observations of the Nigerian financial services industry over the last few years, especially with the effects from the 2008 crisis?
Well, you know, Nigeria, we've come through a long way. We've been looking at Nigeria. I mean, we've sort of, it's been a boom and bust type story. But we're quite encouraged by some of the regulatory sort of developments.
Sanusi has made huge changes across the board in that territory.
We always say we wish someone could write a book about the Nigerian banking story, and I think it'll be a bit of, maybe even turn it into a movie. You know, I think that would be an interesting. Perhaps we should, but I think the Nigerian banking sector has been one it's been one roller coaster ride. We've gone through a heavy cleanup. I mean, just in terms of background, the Nigerian banking sector went from, we had a sector with 89 banks. After the first cleanup with the former governor Soludo, we went down to 25 banks. And after this current cleanup now, we will probably get to, there's still 3 banks that are still under central bank control, but we'll probably get to about 15 banks to about 16, 17 banks, And I think we expect more consolidation. So we're quite encouraged. I think we like what we're seeing in the Nigerian banking sector. The sector is getting stronger. We're seeing tighter regulation. Most of the
Talk to us about a couple of your top stock picks in the Nigerian financial arena.
In the Nigerian banking sector, we like a bank like GT Bank. We think GT Bank is a top bank in Nigeria. It's well run, very high ROEs. You're looking at a bank that's sitting on plus 20% ROEs in Nigeria, in a market that's been quite difficult. We also like Zenith Bank. That's another big bank in Nigeria. So from our perspective, our focus is more on the tier 1 banks. The banks that are more likely to benefit from the infrastructure rollout, from grabbing financing to telecoms and to some of the growing sectors of the economy. Access Bank is one we really like. Access Bank has just gone through a merger with Intercontinental Bank, so it's become a larger bank. We think the benefits from the merger are going to start flowing, we see the banking space in Nigeria growing quite rapidly. Yeah.
Thabo, Africa can be a bit of a paradox. On the one hand, there is obvious opportunity, and yet there are shallow markets, as you discussed. Are you finding that there's more opportunities than you have capital, or are you finding the shallow, illiquid markets quite difficult to navigate?
Unfortunately, since the crisis in 2008, the markets have been a lot shallow. I think also liquidity is dried up. We've seen a case now where there's been a bit of a capital flight out of African markets from international investors.
It's just the risk-off trade.
Exactly. You can imagine if you've got problems at home, the first thing you do is pull out from what a lot of people perceive to be sort of these riskier frontier markets. So capital is dried up. Unfortunately, there are a lot more opportunities than there is capital. So I think we actually need a lot more of a capital injection. So the opportunities are vast in Africa. You pick up a newspaper, anything you pick up nowadays, you just read about this amazing growth story we're seeing. Africa is a continent where you've got 1 billion people that are, actively as we speak right now, people are eating, you can
see the enthusiasm. So I want to invest in your fund. Looking at, that was if I'm allowed to invest, which I'm not, of course. No. I absolutely can't because of potentially front-running stocks. But let's talk about Zimbabwe. Now, that makes up some 8% of your geographical spread. You've said and you've highlighted the consumer story specifically in Zimbabwe. Can you be a bit more specific about it?
In Zimbabwe, we favor stocks like Insco, like Delta. Delta, just to elaborate a little bit more, is a subsidiary or an associate of SAB Miller. So SAB Miller currently, they've actually upped their stake a little bit to 40% of Delta beverages. It's the kind of stock where whether you have problems in the economy or not, people are still drinking beer, they're still drinking soft drinks, and these are the kind of stocks I think that are
defensive.
They're quite defensive, of course. Yeah, Insco is another one where they own the store brand, they own the Nando's brand in Zimbabwe, and from a consumer story, I think Insco is one that's going to benefit quite a lot. So Zimbabwe at the moment, our focus is around, as I mentioned, the consumer side. Another one we like is Seedco as well, the agriculture play. You'll know Zimbabwe has largely been an agriculture-based economy, and I think the quality of the climate, the quality of the soil in Zimbabwe, I think there will be a return in the agricultural sector. And Seedco, apologies, is one that's also expanding across the region. They're expanding into East Africa. They're quite large, going into doing trials in Nigeria, into Ghana as well. So these are the kind of names we like in Zimbabwe, that are participating more in the growth of what's happening on the ground with the growth of the population. People have to eat, people have to talk, people have to eat. We like Econet as well. It's one of the cheapest telcos in Africa. So
sticking on Zimbabwe and the whole indigenization policy, I know that the miners are getting the brunt of the focus at the moment, but how do you navigate investing in the stock market there with this indigenization policy where you could potentially see some of your equity eroded?
Fortunately for us, the companies I've mentioned are all indigenized already. So all the seedcos, the deltas are, I mean, SAB only has 40% of delta, and you know the threshold there is 51% for locals. So we try to mitigate around that by obviously focusing on companies that have already sort of jumped that hurdle. You'll be aware I haven't mentioned banks in Zimbabwe because the banking sector in Zimbabwe is still quite broken. You know, you still have indigenization and issues around Barclays, for instance, which is obviously held by the British parent. You've got Standard Bank, Stanbic, you know, you've got Standard Chartered. So you still have a lot of these issues. So indigenization is still a bit of a risk. And I think for us, we're watching the political situation in Zimbabwe quite closely, because I think with perhaps a change in government and a change in the political system there, I think they might just be open to a bit more negotiation around the percentages, whereas the current regime doesn't seem to want to budge on the 51% threshold.
And I see President Mugabe was offered a position as UN tourism envoy. So you might see a change in the regime. I'm not even going to comment on that.
Let's look at, just quickly, we've got time to touch on, you've got relatively high exposure to construction as well as one of your sectoral themes. And we know that infrastructure is certainly a hotspot, specifically in which of your geographical regions, or is it spread across all of your plays?
It's largely in Nigeria and in Egypt. In Egypt, one of our biggest holdings there is Orascom Construction. Obviously, Orascom Construction we like because it participates in some of the construction projects, particularly some of the large construction projects around the Middle East as well, even outside Egypt. Orascom Construction is a fantastic company. They're currently in the process of splitting the company between, they have a component of the business that does fertilizer. So they're trying to split the company, and we think they're going to unlock a lot of value by separating the construction activities from the fertilizer side. So Orascom Construction is the first we really favor. I think it's one we believe is going to benefit quite a lot as the sort of the Middle East sort of area, and Egypt sort of recovers as well. Egypt is a fantastic growth story. Remember, in Egypt, you've got 80 million people, you know, that still need housing, and you know, after the revolution, the push will come a lot more.
Thabo, thanks so much. We're out of time, but great having you on the show. Thabo Ncalo, he's Stanlib Africa Equity Fund's Portfolio Manager.